All right. Very good afternoon. Thank you very much for everyone for joining. And again, I don't know which number this is, but part of the AWS Founders series, which I'll just quickly explain in a minute. It's lovely to have their backing, lovely to have the backing of Silicon Overdrive. Without them behind us, these events wouldn't be possible. And it also gives me the opportunity to speak to some absolutely incredible people from across Africa and beyond, but all with a passion for Africa, for innovation, for startups, for scale-ups. And hopefully, I mean, this is the point of this series, is this gives you guys an opportunity to learn and put questions to these actually incredible people. So if you've not joined before, that's kind of the background of the series. I'm just going to dive straight in. We've got limited amounts of time. Just before I do that, though, remember I do, if I've not said this already 1,000 times, really, really want your questions. It's not just me chatting with the guest. Hopefully, you're going to get involved and ask what you want to ask as well. So with that, a very warm welcome. Today's guest is someone who's backed some of, I think, the most iconic companies in global tech in history. I'm hoping he'll share some of his secrets about how he's done that. Spotify, you might have heard of. Klarna, you might have heard of. He helped build Northzone into one of Europe's most respected venture funds. And there's a story there. But actually, I think it's the second part of his life story, or maybe it's the fourth, he'll tell us, where he's done something which I wasn't expecting. He's actually turned his back away from Europe to a certain extent, spent a lot of time in Cape Town, and done something his peers haven't done in any great regard, which is turn his conviction towards Africa. So, Hans Otterling, a founding partner of Norrsken22, it's a $205 million growth stage fund purpose built for African tech. This is absolutely not a charity play. It's calculated by someone who's seen what early stage Africa looks like from a global vantage point and decided that there are big opportunities being missed down here in South Africa and the rest of Africa. So, Hans, thank you very much for joining us.
Thank you, Colin, and thank you for bringing up my favorite subject, investment opportunities in Africa. Thank you.
Right, let's kick in to the story then. Let's start. You're from Sweden originally. I've given the high level. We don't have time on this call to go into all the nitty-gritty of Spotify and Klarna, but perhaps you've got 5 minutes just to share how you found those incredible companies and back them, and then we can shift gears and start looking about why you headed south.
Yeah. So I was an entrepreneur myself during the dot-com boom. I raised quite a lot of money from big funds, so I sat on the other side of the table. And when I was able to sell off that tech company around 2005, 2006, I started to look at doing investments on my own. And it turned out that my timing was perfect. There was a couple of things that had happened in the market, and timing is actually so essential here. Around 2005, the music industry was struggling with piracy, and Daniel and Martin came up with an excellent solution of how to solve this issue of piracy and really make sure that the labels, all the music producers were making money again. So all about timing and obviously a great product and great execution. And a little bit the same with Klarna. I mean, they started just when e-commerce was taking off. Everyone was worried about how do I pay online? How do I make sure that I actually get what I ordered online? So all this, in the beginning, there was a lot of questions on both sides, the merchant and the customer, and Klarna became an intermediate between those two and grew to become a billion-dollar company, and so did Spotify. So a lot about it is around timing and obviously excellent execution. After Spotify and Klarna took off around 2006, 2007, 2008.
Hans, were they, just before you go on, were they obvious bets? I mean, everything's obvious in hindsight, I guess, but at the time, I mean, remember, these were companies which were scrabbling around, looking for pennies, not billions of dollars, with literally ideas which I don't know what the evidence behind it was at that point. Were these easy bets to take for you?
Venture industry is as much an art form as it is a professional form, I would say, right? So if we look at Northzone, for example, that franchise is looking at maybe 6,000 investment opportunities per year. So 6,000 investment opportunities are coming into the fund. And out of those 6,000, carefully selected, debated, analyzed, we do 10 investments. So from 6,000 to 10 investments per year. And out of those 10 investments, we know by statistics that 5 are not going to work. But 2 or 3 are going to be okay, and 2 are going to be fantastic. So when you ask that question, did we know that Spotify and Klarna would be successes? We hoped so, we thought so, but we have a lot of losses around Spotify and Klarna, and that's the model of venture capital. That's the risk we take. You know, the whole model is built around the fact that, you know, we will make losses, but we also will create huge winners.
Mm. When you make these bets, you know, what are the kind of, you know, is this a science? Is this an art? You know, is it the passion of the founders that's the kind of tipping point for you? Is it that they have to have a success record? What are the kind of 2 or 3 majors that you put up there that differentiate, you know, the likes of you guys and perhaps the others who haven't had these super success stories?
Well, you know, when a founder comes into us, they usually present their product or service first, and then they present the market, and then they present the team. That's the order: product, market, team. We turn it around. We look at the team, we look at the market potential, and at last we look at the product or service. Because the product or service you can always change. The market has to be there, and it's very hard to change the team. The team that we invest in, they will be the team that takes this through. So we are very, very focused on understanding the motivation, the team dynamics, how they complement each other, and before we invest. That's so critical, and that's where you know, this is more about gut feeling, emotional. You know, does this feel right? Do they express what they're really going to do? And then another very, very important part in this whole chain is trust, right? Do we feel that we can create a trustful relationship between each other, both ways? Right? So we support them, and they actually are trying to do what they said they're going to do.
How do you build that trust? I mean, it's not just you have one meeting and a cup of coffee and obviously you sign a check. I mean, this sounds like you draw out these relationships over many months or even years.
Yeah. So, and it is. So it is, you know, trust is an emotional intelligence. It's not an intellectual intelligence. So, and our emotional intelligence is much slower than our intellectual intelligence on making decisions. It needs to feel, needs to kind of work its way through. So trust takes time, takes multiple meetings, it takes multiple interactions. And sometimes, you know, it can take years, and sometimes it can take weeks, but it needs some time. And if we go into Africa a little bit, so when I was living in London, working with the Northzone team as a partner, there was quite a lot of African entrepreneurs that came to our office and pitched their idea. And we thought, wow, this is interesting. But we didn't have any network in Africa. We didn't have any knowledge about, you know, the African continent on how market size and etc. We couldn't do any real due diligence because we didn't have any local networks or any trusted partner on the continent. So the main reason I think why I started this fund was that you need to be on the ground in Africa, you need to be in the network, you need to be in the known, and have people that you can speak to and do reference checks, etc. So that's such an important part in venture capital. If you are a buyout player, if you buy big companies, existing companies with thousands of customers, maybe thousands of employees, that's another beast. That's another process. Then you buy a known entity, and that trust element is not that critical because you usually change management anyway. when you buy 100% of a company and come in and you're going to reorganize. But we, on the other side, the venture capitalists, we invest everything in the founders.
Mm.
Mm.
Interesting. Okay, so some massive successes. I guess that's quite a few years back now. I forget how quickly time's moving on. When was it that you started to think about Africa, and what was it that actually precipitated you deciding that you'd come and spend at least half a year of your time every year down here in Cape Town?
So, I like, first of all, I'm very passionate about Africa, and I'm particularly, I'm sitting in Cape Town right now. I love this place. So it's also a question from my own perspective and desire, right? But I also think when I started to look into the African tech market in 2019 and travel around, I realized there was quite a lot of talent, a lot of very, very motivated entrepreneurs, but clearly underfunded, clearly underfunded. And then you start to look at the macro trends. Most of us know that Africa is the youngest continent on Earth, the continent that is a huge urbanization wave coming, which is driving growth. The digitalization is here. But if you go a step further, 12 of the most rapidly growing economies in the world, of the 20, is in Africa, right? So Africa is actually doing phenomenally well. And there are unicorns already here. I mean, and you have some really big tech companies, obviously the telcos, right? The Vodacom, the MTN, and the others that is investing billions into infrastructure here. And on top of that, you have like Meta, for example, who just connected the continent with the rest of the world with the longest submarine cable ever built, right? 45,000 kilometers of cable. That's more than a year. So there's so much investments going into the African continent on the tech side. And then you have the young population. So coming back to timing, when we talk about Spotify and Klarna, I think it's the perfect timing to invest in Africa tech now. I think this market is about to take off big time.
Why do you think that? I mean, I look around, the rest of the world, and I've kind of perhaps I don't know if it's a little bit naive, but Silicon Valley is obviously driving pretty much everything. There's an arms race in terms of AI and tech between China and the US. Europe actually seems to be struggling because they put so much focus on what some, think are essentially laws, protective laws, which basically fight against competition. Whereas the US just says, we don't need regulation for AI. We don't need regulation for crypto. We're just going to worry about that in a decade or two. You've got free passage to go and design and build whatever you want. And obviously that's phenomenal for innovators. So there's so many other parts of the world that seem to have the backing of governments, and they've got that, I don't know, built-in DNA where they've been doing this for 60 or 70 years. What really is it that gets you excited about Africa, and maybe it's now its time?
So, I mean, if there's no contradiction in if US does extremely well and China does extremely well, Africa can do extremely well as well. I mean, it's not like someone has to do bad because we're going to do good. Right? So I'm just feeling that I want to be on the playground in Africa. The competition in the US and in Europe and China is immense. I see what the fund that I'm owner of today, Northzone, how much competition it is for each deal there. What you have to pay for a programmer, what you have to pay for talent. You can just see the money that is raised for you in the US for the AI companies because they need to pay a sign-up bonus for $10 million for someone to move over from one company to another. So there's a fight for talent, and there is a lot of talent in the African continent that is underutilized, underfunded. And that's, for me, it's a great opportunity. That doesn't mean that there's not opportunities in the US or in Europe. There are
Okay.
opportunities as well. But I just feel that here is actually something that can become. I think I can provide competitive returns to my investors being in Africa if I was in Europe.
So you obviously backed this with your cash, and you were convicted enough to do something which I think perhaps is the hardest step. You convinced your mates to invest in Africa as well. Do you want to tell me about how difficult that was to go out to your network and convince them that you need to spend, millions of dollars a pop to go and create your $205 million fund here under Norrsken22, your first fund? How difficult was that?
So when we started talking about Africa, when I asked my friends and my entrepreneurs, what do you know about Africa? Everyone gave me a very different answer, and they know, the fact, no, they knew very little. Some have been here on safaris, some all have been to Kenya's coast, and most of them read, primarily negative news about Africa, because that's what I think that's the big PR problem for Africa. But when I said to them, when I started to tell them about the demographics, the market size, etc., I said to them, you need to have a relationship with Africa. So if you take Delivery Hero, for example, Niklas Östberg, who's an investor in the fund, I said to him, what are you doing in Africa? And he said, well, at the moment, I'm primarily focusing on Asia. I need to get a foothold in Asia. But one day I will land in Africa, and then I will not start out from scratch. I will acquire a company. So I said to him, this is a perfect way to get to know Africa, investing into Norrsken22. And then you started to build a relationship and a network in Africa through us. So 34 entrepreneurs put in $70 million into the fund. That was the first ticket. And then Niklas Adebeck and myself topped it up. And then we raised another 100 million from institutions. And positively, we have Standard Bank as investor, we have Christo Wiese as an investor, and we have a big Kenyan family office as an investor in the fund. So it's not only European money or international, but it's actually also African money in the fund, which is very positive.
So is this I'm just going to be blunt about this. Is this really just because, these guys are backing you? Or do you think actually when you zoom out, there is a lot of interest in Africa across VCs and investors, both internationally and locally? And where I'm coming from on that is speaking to some of the other PE investors and VC investors. This last 12 months, they've been quite negative, and they've continually highlighted the fact they're worried about exits. They see it difficult to go and sell the Africa story at the moment, at least into the US. They don't see opportunities for IPOs. Those things are closing out, and they're very worried about funding, as you go sort of Series D and sort of beyond. Is that your sense as well? Or, is it this guys are backing you and you're going to work out a plan in 5 years? We've got plenty of time to worry about these at some point in the future.
It's interesting you say that. So was it 2 weeks ago when BVNK was acquired by Mastercard for 1.8 billion US?
Yeah, I
South
had this
African
question
company.
prepared before BVNK, so maybe. It's a good
And
point.
didn't Optasia go public for like 4 months ago on a valuation on Joburg for 1.4 billion?
Uh-huh.
So it's happening. It's happening in front of our eyes. It's not going to explode and everything's going to happen at the same time, but the snowball is starting to roll. I promise you. You look at Flutterwave, OPay, Wave. I can probably count up 10 unicorns in Africa, and those have happened the last 3-4 years. But if you're not here, if you don't read African news, if you don't expose to this to the news flow from Africa, you're still stuck in your old view of Africa. And I think that's the PR problem for Africa. We haven't really been able to voice out what's going on here in a proper way. And I must go back to Sweden and Europe in 2006, 2007. It was a backwater of venture capital, right? There was nothing going on. Everything happened in Silicon Valley London had a little bit of a foothold in when it comes to venture capital. But everyone was talking about Silicon Valley. In Silicon Valley, VC said, "Oh, we never travel outside Silicon Valley. We do maximum a 2-hour drive from our office. That's what we do to invest. Otherwise, we're not interested." And now the VCs are flying around the globe to meet Stockholm-based entrepreneurs like Lovable or so. So the world is changing, and I'm sure international VCs are going to start flying into Africa as soon as we have some more home runs.
Mm. Do you, where, I mean, this is very positive, but my sense is that we're at the start of our journey here. I mean, we've got many decades of work here to go and make up. And what I mean by that is, if you're in Israel, if you're a United States, and I guess if you're a Sweden, I mean, it's incredible what's happened, from your home turf there. But you get this snowball effect, where over a couple of decades, people get into the rhythm. They start to understand what it is to go and back, venture capital, to understand the model about how many will succeed versus the majority that fail, and then to get comfortable that, people that do fail, if they've got the right attitude, they come back, they have another go, they learn from their experiences, and you get this huge network effect, which I think is critical for doing startups and scale ups properly. And so we're on that journey. There's no doubt. Where have we got gaps? Where do we need to focus more of our attention to go and accelerate the progress that we're making in doing this?
I think on all levels, if I'm going to be blunt. I think, if you look here in Cape Town, we have some co-working spaces or some incubators, like Innovation City. In Kigali, we have the Norrsken House. In Nairobi, we have a couple of them. In Lagos, we have a couple of them. So, you need to create this environment, I think, for entrepreneurship, the people there to say no to a bank job or to a consultancy job and break out and start their own company. So that's one important point, and that is happening. And then, what we're trying to do, Norrsken22, is trying to do, the little bit, so if we have seed capital and early stage capital, we try to be a little bit later, late A and B and C rounds. And we try to also be a catalyst, so we can actually I can call funds that I know in Europe or whatever and say, "I have a very interesting company here, come and co-invest with us in this company." So we can actually attract more capital to our successful companies that needs growth capital. And that's the whole thought about Norrsken22. So we are a venture fund, but we do a little bit later stage. We do $5, $10, $15 million tickets as the first ticket.
But I'm going to put you on the spot here. If you just had to pick one area to focus on, is it at the startup area? I know we've chatted in the past about, we don't really have the incubators like you've got in the US, with Y Combinator, for example. I don't think we really have, something at that. Well, no one's got anything of the scale of Y Combinator. I mean, they're just, massive. Are we lacking in that area? Is it on the corporate relationships? We're not seeing enough corporates getting into venture capital and backing, people through private equity. Is it on the exit route? Is it just maybe? Okay, I'll let you choose two. Which are the two areas, you think that we really need to focus on and you're passionate about?
So there is a death valley, and we talked about this in Europe as well, right? There's a death valley. You're a successful company in Kenya, for example, and you have the product market fit is there. You have real customers, and you need expansion capital. And it's very hard to find people that can write a $5-10 million check. That's an area where we try to fill, and that's still, what it's like Norrsken22. It's Partech, it's TLC Com. We're like four funds here on the African continent. 4 funds. It's nothing. It's nothing. We need to be many, many more. So that's an opportunity for us because the competition is very low, right? But we need more capital in that segment here. And then we need some more successful exits where people say, "Wow, you can actually make 10x on your investment here in Africa." Then money will come. it will come.
Mm.
You know,
I wonder if we're doing enough. Go on,
yeah,
go
when
on.
we invested in Spotify, our fund, we didn't have a single Swedish institutional investor in that fund. Everyone was sitting on the bench and saying, "No, we're not going to do venture." And then we had 150x on Spotify, and everyone said, "I want to be in venture," and now everyone is in venture. So we need a couple of those home runs to show the market that it's actually working. And that's going to happen. We are on our road to do that.
All right, let's jump into some of the questions that are coming through. This one from Craig. Have you seen specific challenges and opportunities in SA that other large African countries don't seem to have? Specific opportunities and challenges in South Africa as compared to other African countries. I mean, that's it's a very big question, that.
I think South Africa is the most developed country in many ways, right? We have a company called AutoCheck, for example, which I think is very great for Kenya, Lagos, Nairobi, etc., because we do car financing. So car financing in Western world, about 70% of all cars in the Western world is financed. In Africa, it's 2%.
Mm.
So that's obviously going to go. That's going to change over time. So it's going to be more car financed in Africa. Here in South Africa, that sector is a bit developed, but in the rest of Africa, it's an open field, right? So I would say in many times actually, you do a little bit later stage other type of investments in South Africa. We are in TymeBank, for example, which is doing phenomenally well. We just mentioned BVNK, Stablecoins. So I would say South Africa is the most developed tech market in Africa, but the others are catching up.
Yeah.
And there's a little bit different opportunities in each market.
That's interesting about the lending. Let's just dig into that. It sort of picks up on John's question as well, which I'll share so you can see it. But if we look at fintech's a massive part of Africa. We need to find out what your view about other sectors are. But obviously fintech is huge. We've got Nubank there, which you've just mentioned, and TymeBank, and their sort of tie up. We've seen CrossFin doing really well with the Dumo going through to Lusaka and Ikorka going through to Nedbank. We've got and when you look across, most of the kind of companies we've talked about so far that are unicorns, predominantly a fintech. Was it MNC Harlan? Fintech lending for tuk-tuks initially, or you mentioned sort of Flutterwave payments orchestration. So it's interesting, where we've actually started to come from with these infrastructure plays. I like John's question there. Do you think there's a big opportunity for, fintech where they're starting to get into the balance sheet side of things, or is it really sort of infrastructure light, plays that are going to be, where do you see the opportunity there?
Yeah, no. So I would say that if you look at tech, the first step is access to internet, right? And that's now sorted, I would say, almost. A majority of all Africans have access to internet today. And the next step for anyone is obviously social media, but also financial inclusion. I mean, it's very hard to shop online if you don't have a bank account or a credit card, right? So, and it's very hard to send money or to do transactions or whatever if you don't have a bank account. So, a lot of our investments have actually been is fintech oriented. Like the car finances is a fintech play. And the interesting thing with car financing in Africa, from my perspective, it's a much more secured collateral than in the Western world, because a car here in Africa is usually used for work. It's either Uber driver, delivery, or you do something with the car to earn an income. So you will always pay your interest and whatever you have to do for keep that car in your possession, right? So we see very few defaults in our car financing business. So there's a lot of opportunity within fintech, definitely. And then we have other sectors. We have medtech, and we have edtech, and we have something called market enablement, which is removing friction in trade. So that can be online marketplaces, etc. But most opportunities we have found in fintech. And take TymeBank as an example. Last time I heard, they had 16 million account holders in South Africa, growing rapidly. And what are they good at? What are they really good at? Well, they're really good at customer acquisition. They get a new customer for under $2. If you take American Express, if American Express wants you as a customer, Colin, they're probably willing to pay $500. But here, since the revenue per account holder is so low, the customer acquisition cost has to be super low to get a return. And now they launched their business model into the Philippines, and they now have 8 million account holders in the Philippines. And now they're planning to launch in other Asian markets like Vietnam and Indonesia. So you have a South African business model making it global, which I think is a proof that there will come out new business model from the African continent because of the market's dynamic here is a little bit different than in US or in the rest of the world.
Okay, Anton, I'm going to see if we can call you up. Anton, you had a question. Go for it.
Thanks very much, Colin, and good morning, Hans, or good afternoon. Really enjoyed listening to you so far. One of the statements you've made is a sort of a traditional one that, we invest in a basket, and in the basket, a number of the opportunities will mature successfully, and some don't, and hopefully the good ones make up for the bad ones. In the world we live in today, and we've learned so many lessons from venture investing, and these lessons are not around governance and slowing the process down, quite the converse. One of the big lessons I've learned, for example, is how do you set the rules for investing clearly up front, so that we minimize the consensus debates afterwards, which derail everything. Are we not able to reduce the failure rate, is the question, by doing some more thorough due diligence up front, and so the fund doesn't have to persuade investors that 5 out of 10 are going to work, and let's hope they make up for the losses. Can we not optimize that process more? We've got such smart tools today. We've so many lessons learned. I'm just concerned that we tolerate too many failures. That's maybe too optimistic.
Yeah. I mean, due diligence is such a critical part of what we do. I mean, we spend a lot of time and actually a lot of money on our due diligence processes to understand the business model, to understand customers, to understand the team, and get to know the team. I've been in the industry now for more than 20 years, and I wish I could have a better answer to you, but the statistics I just gave before, that out of 10 investments, 5 will most likely fail. That is still true, and it's still true for almost every venture fund I know. It's a part of the model when you go in early. And then the structure of the deal. You can do a very complicated shareholders agreement, with pref shares and lock-ins, and you can do a lot of. You can have a shareholders agreement on 100 pages with rules and stuff like that. But the fact is, during my 20 years, maybe 3-4 times we have pulled out the shareholders agreement, start fighting about it, because usually pref shares are worth nothing if the company goes bad. And if the companies go well, the pref shares are going to be equal to other shares because the return is so good. So the 2x doesn't matter any longer on the pref shares. I like what Y Combinator has done with the safe note. Simplify the entrance level for an entrepreneur, and make it very clear how it starts. So for me, it's more about the team. It's more about understanding the market, and not so much of building too much structure in the beginning, but instead really understand the dynamics of the company and, again, the team.
Let's pivot to not that these questions have been negative. Maybe I've been negative, but that's normal. I'm English. Let's try to be more positive now. At least I will. Where do you see the opportunities across Africa, Hans? Because you've already got a fair number, 4 or 5 years of experience here, successes with a number of names that you've already mentioned. Your knowledge base about the opportunities of Africa is 100x more than it was perhaps back in 2018. You're a genuine expert in this field now. Where do you get really, really excited as you look across Africa?
So four tech hubs are emerging in Africa: Cairo, Lagos, Nairobi, Johannesburg, and Cape Town. And that's where the action is. That's where talent, ideas, entrepreneurs, and capital meet today. And I think that's just going to accelerate in concentration, so to say. And the same thing happened in Europe, right? In Europe, you can count 7 cities where everything is happening. So geographically, that's where you need to be. And then you say to me, oh, okay, which sectors? I think still Fintech has a huge potential. I think stablecoin is going to change the continent. I think stablecoin is actually going to have a massive impact on Africa. It's going to unlock so much trade and remove friction when stablecoin is introduced, right? Where you have a trusted currency. If it's US dollar or euro, I don't care, but it's not the local currency where a politician can come in and suddenly change the interest rates and will do whatever to devaluate the currency. It will be transparent. It will go quick. It's going to change the continent. I think that's one of the big things. And then the fact is that you have a growing market. You have, as I said before, you have a population that is growing up. 60% of the African population are below 25 years old. So they're growing up, becoming customers. At the same time, you have an increased internet penetration. And at the same time, you have urbanization going on. And all those three are very powerful economic factors, right? Which is growing the market from a fairly small base, but it's growing with 5, 6, 7% per year. We're talking China growth. We're talking China growth here. So 10 years from now, the African market, if it continues to grow with 6, 7% per year, it's not going to be double. It's going to be triple to the size of what it is today.
You didn't mention agri-tech. I mean, a lot of people just opened Letha's question there, but agri-tech, something that's of interest or overhyped, too difficult, too complex, too fragmented?
Agri-tech for me is nothing that we have seen a couple of them. You have to be a little bit of a specialist. You have to, from my perspective, you need to know how that market actually works. And agri-tech can it's quite broad. It can be chemicals, it can be drones. It's quite a broad spectrum. And we have seen few agri-tech opportunities compared to all other opportunities that we see. But it's definitely an area that where I'm sure there is opportunities to do. We have seen a couple of within real estate, which we think is super interesting. And then we're talking about marketplaces, and we talk about other things. Around the whole fact that there's going to be a lot of construction going on the African continent. But as a fund, coming back to Anton's question before, how do we try to avoid as many failures as possible? We need to be a little bit of a specialist. We need to understand what we invest into. And if we go too broad into too many sectors, we will lose that edge.
Tell me more about your view on stablecoin. I think stablecoin's fascinating. And if we look at globally, clearly we've got two massive, providers there, USDT and USDC, and certainly when it comes to Tether, there's lots of negative news that's going around because you are dependent on the company that is running this platform, and you are taking risk. When you onboard your currency, your US dollar or whatever it is, to go and use stablecoin, you're taking proper credit and company risk with these platforms. So how do you see that developing? Do you think this is going to be something where it's a couple of global players which are sort of, I don't know, tacitly backed by governments and large financial institutions, almost in a way where we have a new version of MasterCard and Visa type coming up? Is it MasterCard and Visa that take these on, or local governments? What do you have any initial views? Because we're so early in this journey, but it does feel like something which can make a massive difference.
Yeah. It's not early days, but it's early, right? So they've been around for a couple of years now. Teacher obviously become a massive company, but the fact that MasterCard now bought BVNK, I know Visa is out in the African market looking for partners on stablecoin. So I think that the market, the old incumbent market is waking up and say, wow, something is going on here. We need to get their act together. So I think there will be many different issuers of stablecoins. And of course, somehow they need to be regulated. It's hard because stablecoin is obviously by nature international, right? So I think it will become a market where trust is so important, and the partners like MasterCard, Visa, and so on obviously have a one up on that one because everyone knows those companies and trust them, etc. So this final play of the regulation of stablecoin is still in the out there from my perspective, and it probably will be for a while. And some governments are going to try to stop them and going to try to hinder them because they interfere with their monetary policies, etc. But I think actually that it's unstoppable. I think it's unstoppable if you don't want to shut down the internet for people.
So let's talk about another unstoppable thing. And I don't know if people are fed up of talking about AI, but I think they need to get ready, because we're not going to be talking about much else for the next decade as far as I can see. And when we're talking about investment in Africa, AI has to be, we should have started perhaps, with this, because it's literally transforming everything. I wrote and posted an article yesterday where I just said, is this the end of unicorns? Maybe we need to be going looking for zebras, so we're going to look for profitable businesses. They're doing very nicely. Maybe they get to 100 million valuation, but this is a pipe dream. Unless you just happen to be some coder with a pizza box in a basement and come up with OpenClaw, and you sell yourself as an acquihire to OpenAI. The rest of us normal people, it's going to be incredibly difficult. This is one argument to go and build successful companies, because AI is democratizing the opportunity to go and build anything you want. The other view, well, I don't know what the other view is. What's your view? What's your view in terms of how AI is transforming, the way you look at opportunities?
Well, this is the billion-dollar question, and I can just share. I love to read history books because I think they give a much better understanding of what happened and what will happen than reading management books or other types of, and technology is always ahead of adoption, right? So now AI is coming as a technology, and everyone is trying to understand what are we going to do with this. And investors are in the forefront, right? So at the moment, AI is heavily subsidized by investors, heavily, right? And if we go back to 1998, 1999, the same thing happened, right? Internet was coming. It was heavily subsidized by investors. You know, people were pouring money into internet. No one knew what business model would work. And then in March 2000, market said, shit, you know, this nothing, no money is coming back. And Nasdaq fell from 5,100 to 1,100. It fell 78%. It took 15 years to get back to 5,100. 2015, it was back to 5,100. This can happen again. This can happen again. We don't know, you know. So I'm still kind of wobbling a little bit. What is going to happen? Who's going to find the business model for AI? You said that AI is going to democratize. Is it? Who's going to pay for it? Is it going to be a freemium model? Is that going to be enough? Or is it the really rich guys who's going to use AI and are willing to pay $5,000 for use it because they can afford it and use the best? So I think the question is still out. You know, which business model is going to come out of AI? And we know that everyone is pouring money into OpenAI, Claude, etc. Right? But no one really have a clue how we're going to make money.
We're seeing lots of companies reducing their staff and headcount. They're freezing hiring. And we're also seeing staff trying to hold on to their jobs, so they're less likely to go and leave at the moment. These are all indicative that AI is having some sort of impact. Do you think, you know, if we extend for a year, 2 years, this worry that it's going to be incredibly, it's going to be a big dislocation for people, especially white collar workers in the employment market. Do you think this is a valid concern, or is this just, scaremongering from newspapers?
Oh, definitely. You know, Oracle last week fired 30,000 people, 35% of their staff, 20%. Just got an email saying, we're doing a bigger reorg. You're not longer needed. Bye-bye. 30,000 got that email working at Oracle. And of course, it was driven by AI. You don't fire 30,000 people off the bat if you don't have a plan how we're going to replace them. So yes, it's definitely happening. It's definitely happening. And the question is, you know, who will be the giants here? Will it be the one we know today, who's going to sit on the platforms, and then everyone of us, other ones, you know, startups, we build a wrap around the AI engine, right? And the day the AI company decides that I take this service myself, the startup is gone, right? So if you go too horizontal with your offering, the risk is that the big AI companies are going to eat up your business. So you need to be very sector specific, narrow in your offering, I think, to survive as an AI startup.
Let's dig into that in B2B and B2C. I think there's two different opportunities there, aren't there? B2B, let's think, Salesforce, as an example, any of the big CRM, platforms out there, any of the ERP providers, SAP, for example. Do you have a view in terms of, are they going to be disrupted? I mean, they're big filing cabinets, or actually are they safe as houses because they're so networked, integrated into the big corporates infrastructure? You can't get rid of these platforms. I don't care if someone says they can vibe code themselves a new, CRM. You're not going to go and do this for a 30,000 global business like a bank or, a telco. So that feels like, a very different set of circumstances and opportunities for backing in VC than the B2C market, the retail market, because something I can actually whip up something quite easily with a Replit, which serves my needs. I don't now need to go and use HubSpot, or I don't need to go and have Sage as an accounting package. I can see opportunities to go and save hundreds of dollars a month of packages I've previously had to use as an SME or just for my personal use. That feels like a very different sort of risk and opportunity, when you're looking at the startup market. How do you see it? I mean, it's such a broad field, but how do you see these different opportunities and risks?
I think you said it almost. I think the big ones, SAP, Oracle, Salesforce, and a couple of other big strategic business, ERP system, they will stay. There's no one at board level going to say shut down SAP and start replacing it with some AI agent. No one's going to. So they're like a nerve system in a big corporations like BMW. You can the big Fortune 1000. Everyone is using SAP or Oracle. They will stay. And they will become more profitable, SAP and Oracle, because Oracle just fired 30,000 people that they don't have to pay salaries for. So that group is going to become more profitable. I'm surprised that their share price has actually gone down. Their share price should go up. But then you have the middleware, the Sage and everyone else. I would be scared if I'm a shareholder in those companies, because they will be replaced, or they need to change their business model or how they charge for their services, because they're not strategic. They can be replaced fairly easy depending on how big the company is, or so I'm totally where you are. And then I think the AI business model in the future, now it's a freemium. The investor pays for using it, right? And then you have the subscription model. But I think it's going to be utility pricing instead. So it's going to say, oh, you want me to do this website? It's going to cost you $50. So you pay for a job. You don't pay for, but you pay for the outcome. And I think that is something we will see more and more, where you just like asking someone to do a job for you, and he said, oh, it's going to cost you this.
I mean, are you still backing software players, software as a service? I mean, I kind of I don't know if it's a starter, if it's just come from listening to too many late night podcasts, but Y Combinator, 100% of their intake now is obviously AI focused. Most of those, if not all of them, are using vibe coding. And the reality is every single one of those companies they're backing in one way or another isn't going for SaaS. They're trying to take out SaaS. So they're looking at it and going, the SaaS market's kind of 400 billion globally, whatever dollars. But actually the labor market, that's 10 trillion. So if I can replace labor and not just go and append to or remove some SaaS provider, this is where the real opportunity is. Are you trying to do something similar with what you're looking for? Or is it a different play in Africa?
So if you look at our portfolio, we have very few SaaS companies. So we have, TymeBank, for example, is obviously not a SaaS company. Stitch is obviously not a SaaS company. AutoCheck is not a SaaS company. It's more transaction revenue model, right? So we have done very little in SaaS. I think we might have one or two in our portfolio that has a SaaS model, but that's it. So because of what you're just talking about, I think we will see a shift in the modern business model where you buy tokens, or you buy somehow they will shift the model towards a value added model instead of a subscription model.
Right, we've got 5 minutes just around left hands. Tell me what's next on your agenda. Are you still happy in Africa? Are you still planning to go and invest more in Africa, or have you had enough and it's about time to go back to the beautiful homeland you come from?
No, we definitely gonna be around. The team here is amazing. I have a team of 15 fantastic partners. They're doing a great job. I think one thing that I have debated with some people is I would love to see a Y Combinator in Africa. Imagine that if we could draw out like 25, 30 companies per semester and have them run through an African Y Combinator, and then invite investors across the globe to come down to Cape Town, Johannesburg, Nairobi, whatever, for 2-day presentation with these 30 top selected companies being worked through a Y Combinator model, and they pitch for these investors. I would love to see that. So if you know anyone who wants to run a YC Combinator here, I would be happy to talk to them.
Guys on the call, I'm sure that between the people that have registered and the people, the 65 or so still on the call, there's going to be a couple raising their hands or know someone in that network. So watch out. I think there'll be a few emails coming through over the next couple of days, their hands. And in terms of funds, so supporting a Y Combinator type setup is A. And do you have plans? What are you allowed to talk about in terms of what you want to do next in terms of future rounds and raises?
No, so we're still investing from our 200. I mean, the venture model is that you build a portfolio of 15 to 20 companies. I think we have 15 at the moment. So we still have some big companies to add to portfolio, and then we save a big chunk of the fund to do follow-ons in the companies that are doing well, the winners. That's how we have a privileged access to invest in our successful portfolio companies. And then obviously we will raise a new fund when that timing is.
Cool. Hans, I think I'm going to call it there. I don't want to run over our time. I'd prefer to be just a minute or two early, and there's so many questions that have come through. We're never going to get through all of these. I'm not going to promise that we'll be able to answer them, but I'll promise I will chat to Hans afterwards and see if we can answer a couple of them without committing to anything that he doesn't want to be committed to. For the next call, we've got no date yet, but I think it's going to be with AutoCheck. So that's one of the investee portfolio companies that Hans has got behind. It sounds like an amazing, model, and I think that's where your stat about the vehicle financing comes from across Africa in terms of the opportunity. That's right, isn't it, Hans?
Yes.
So looking forward to that. We'll give you.
No, I just want to say thank you for hosting this and for inviting me.
It's an absolute pleasure. And then for everyone else, please, do sign up. Make sure that you stay on the mailer so we can give you the details. Again, I'm going to thank Silicon Overdrive and AWS for supporting us. When you receive the mailer, just have a look, though, at the other sponsors, because there's a whole heap of other companies that make these sessions possible by distributing to their networks and letting other people know about the interviews, putting us in contact with great guests that are coming through. And of course, all of you, if you've got things that you'd like us to go and focus on, people you want us to go and invite on to go and talk, or suggestions about how to make it better, more interactive, please do send it through. But with that, I wish you a fine Tuesday wherever you are in the world. Thank you very much for joining. I hope you got some value out of it, and watch out for the links and the write-ups that we'll be sending out afterwards. And to Viiso's comment, by the way, just as a specific note, it's already there. We can vibe code the details of this and give you something to look for. We'll share details on that soon. Bye-bye.